I think we got all the right buttons pushed. All right. Okay, so on Theta, Spirella, Sniper Princess, Stress Relief, bam, bam. Over here we got Todd B. And by the way, if you have like a little morning greeting or whatever greeting, getting some freezing. Let me know if the audio froze or if that was just. It's weird. I try to disconnect as many things so there's not too much bandwidth blowing across this thing. I think what was jacking the videos last week was that we were using at the same time Twitter Spaces. We were trying to run it, and it doesn't work so well. So we're not going to do that much. All right. Maybe if there's another way to do it, maybe you could record it and then redo it. I don't know. Anyway, Biotech Breakout, good to see you. Todd B, good to see you. Patricia, Cisco, what up? On both sides. Bam. Yeah, 3 arrows. Well, we're going to learn more and more that their behavior was a lot more degenerate than people realize. That's going to come out. They're going to find out that those two guys were doing some very risky stuff, some very creepy, risky stuff. My guess. There's no way they could get. You just can't choose that many bad projects and be competent. It's not even. Doesn't even seem rational. Let me see if I can get this a little better. There, let's try that. Oh, my chin is covered up by my messages. Okay. Patricia, what's up? Brian in the house. What's going on? And let's see. Joe. Get on to Joe. Hope you're doing good. Tube that pipeline. Jungle in the house. What up, buddy? Yeah, we're going to talk. I feel like Jungle and I are fighting this little war on Twitter. We're on the same side. This war against like incompetent thought. It's a tough war, Mike. Dan, what's up, man? And look, real quick, I don't urge anyone to agree with me. I urge you guys to go and ask questions and come up with your own conclusions. You shouldn't just blanket agree with anyone. You should always say, well, does that make sense? And then kind of go and reason these things out on your own. Do the game theory. If you don't have some kind of way to analyze projects and stuff, you probably need to get some kind of way. But just because I like something or don't like something doesn't mean you should or shouldn't like it. But you want to make sure that the reasons you do or don't like something make sense to you. You're the only ones that has to sleep at night with your assets. JJ Chang, what's up? Mark, what's going on, buddy? Mike, Mark, Mike, Ella Paul, Tim, bam. Tiffany, what's going on? Barno, what up? We're still, oh, by the way, we're getting the sticks ready for the almost free launch. That's right. Slowly but surely, Brandon's really been, crushing it, working on, we're just doing a kind of a simple website. And you're just guaranteed to lose money if you buy this NFT. That's what we're going to do. We're going the other way. You're guaranteed to lose money. That's a guarantee. Not a lot of people would make that guarantee, but we will. Shata73, Askus, what's up? Dave, Spycam, what's going on, man? P. Kelly, Scott. Nexo, I think Nexo is. We're going to talk about Nexo a little bit. I think Nexo is fine. When you go through and hear this thing it looks like it was kind of a scam. Those of you that heard the kind of weird news that like a website spun up out of nowhere, started connecting the people at Nexo to some weird organization. And we're supposed to believe that Nexo, that has like almost 13 billion in assets, stole like $500,000 to build a house or something. You're like, that doesn't even make sense. They make more than that every 13 minutes in fees. It's like, it's pretty stupid. Then when you dig into it, different name, different person, there might be a related cousin, but like it's all really weak. And it looks like the dudes that created the website are just trying to get a bunch of hits on the website and then sell the website. The Twitter address, like it's already for sale for $50,000. And then they made like furtive gestures to Nexo. Hey, we'll sell you this Twitter account and then you can shut it down. Like, what a weird kind of thing. Anyway, Houday, what's up? Jay Finley, what's going on? Okay, so let's keep going. Let's keep saying hello to people until we get them all. Debbie, what up, Debbie? Nick. Yeah, no, it was a good weekend, man. Chris, I was at the beach yesterday. What? Just not. Good. Oh, good. Audio's good. Yay. Who do we got? Sarah. What up, Sarah? Critical thought. Yeah, we don't have a lot of that. Philippe. Kenneth. What up? Top shot. Long bottom. Seuss. And let's see. Did we get everyone? Oh, Linda. I think that's pretty much good. Okay, you guys know the rule. We got to get at least half as many likes as the total amount of active viewers. So you need 23. 23 minimum. It's your choice, people. It's your choice. I don't monetize this crap. I keep getting these emails from YouTube that say, listen, we have a team that will help you monetize your videos. Nah, bro. I don't mind the videos at the beginning, like the commercials at the beginning of videos, because they are giving away like free stuff. Like I watch a lot of science videos from like this kind of Science Now thing where they talk about volcanoes and erosion, all sorts of cool stuff. And I don't mind watching those commercials because that's how they finance. They have like a Patreon and that's how they finance their show and like do cool shows. But my show is financed off of coffee. So we don't need that. But sometimes they serve ads before and you have nothing to do with it. Anyway, these videos do not have monetization. There's no money being made from any of this crap. So just so you know. Oh yeah, man, Lost Club Toys. It's dope. And you guys know I don't really like work on a lot of, Brandon and I have our own project, right? The NFT project Sticks, which is just a meme of crypto in general, just making fun of crypto and all of us. But I don't get behind any project except the Lost Club Toys just because I like music. I'm very close to music and I like what they're doing and this whole kind of collab to earn, and all the artists are great. And it's just a real cool, the dudes that are working on it are super cool. So they're great. And so because of that, I'm around, but full disclosure, I'm not getting paid anything. I think I get like a chunk of like free NFTs, but I'm not like on the payroll. I'm just a consultant and a nerd who likes the stuff, but I will probably get some. I'm trying to, hopefully I can get enough of them when they do the mint to like make music and crap. I don't know anything about making music, but I feel like that would be super cool. And hopefully I get some good like sounds, and I'm pretty good judge of like what cool sounds are. So I'm going to go through and I'm going to try to buy up other people's sounds, like little sound bites. Anyway, for those of you who haven't, it's a project that we're building. I'm not part of the building process. I'm just part of the consulting, but it's real cool. And if you're into music and like EDM and DJ culture and stuff like that, I think you would think it was pretty badass. So yeah. All right, Bernard, what's going on? Sylvia, Crabby in the house. There's a really good place, by the way, and I'll get on to the business of today because we got some stuff to talk about, but there is a really good, if you like crab and you're in Los Angeles, there's a place called Krabby Krab. It's pretty simple. It's called Krabby Krab. And if you like crab, go to Krabby Krab. And I assure you, you will not be unhappy when you leave there. You might want to throw up, but only because you overate. Certainly won't be because of the quality of the food. Okay, let's go to our commercial, non-commercial breaks, and then we'll get back with it. And there was a question, and I will, we'll hit this right when we get back. But the question was tweeted about Near distancing themselves from the stablecoin, but I haven't seen anything. No, I tweeted that I hope they distance themselves. What I mean is they've kind of slowed down on their advertising for their algo stablecoin. I think that everyone should realize, Adam, what's up? I think that everyone should realize that these pure algorithmic stablecoins, no bueno. It's not going to make it. It turns out that if you want to have currency units, digital referenced currency, digital, proxy currency units, you need currency units behind them or a government that's willing to issue those. So government-backed stablecoins, you can like them or not, but they're coming. Good. But not, when the other side of the balance sheet is just a big question mark. So we're going to talk a little bit about that too. We're going to talk about USDT and how people are starting to short it. There's some money in there shorting it. It's kind of interesting. Fadi, Rebecca, what's going on? Anyway, yeah, we'll talk about it. And Adam, what's up? So we'll talk about all these things and more in a second, right after these non-commercial break. Which one should I play? Let's see. There's a few, We'll do this one. We'll do the short one. Are you night driving? I don't really rock. Weird, doesn't it? Sounds like some bumper music. But this could be a rock day. I don't know. Is that rock? Does anyone listen to rock? Does anyone know what the F rock is? It's got too much. It feels like I should be reaching fever pitch, like throughout the music periodically. And maybe we should be feeding ducks. Let's see. Oh yeah, we're feeding ducks today. This is a chill day. It's Chill Monday. Jeff, what's going on? Pew pew, pew pew pew. Okay. Yeah, Krabby Krab is dope. Oh my God, so good. Gordon Bennett, what's going on, buddy? All right, so let's do this. Let me pow that. Let me get rid of that banner because you guys get it. We're going to talk about Three Arrows Capital. I think we should expect some pain this week, but we'll get into it as we get into the article. But first, let's just take a quick look at markets. We are still market cap. We are under 900 billion. So we're still in this gully. Do I think most of the altcoin damage is done? Yes. Do I think the Bitcoin damage is completely done? My gut says no. And again, technical analysis doesn't work. Like, no amount of technical analysis knew that Three Arrows Capital was going to go under, Celsius was going to go under, that Luna was going to go under, and that some idiot companies were investing in all three, and that some idiot companies were lending them money. Like, Mike was talking about this. Jungle, he was saying on Twitter, and it makes sense. At a certain point, Three Arrows, the unwind is bad, but what about these people that were loaning them ridiculous amounts of leverage in the form of credit? Like, that's dangerous as AF also. That doesn't make any sense. Like, you're not a competent fiduciary if you're gambling, lying, cheating, stealing, and gambling, but you're also not competent if you lend that liar a bunch of money, right? Like, if you have that creepy uncle that's inappropriate with all of like the young kids in the family, and like every time there's like Christmas, they're like, don't go sit on Steve's lap. I'm like, ooh, God. And like, don't be in a room alone with Steve. Like, why does Steve keep getting invited to Christmas, first of all? Like Uncle Bad Touch, they called him, right? So like, if there's an Uncle Bad Touch, and who's Uncle Bad Touch? Celsius, Uncle Bad Touch. Luna, Uncle Bad, and anything, and anyone, and anything from those projects, Uncle Bad Touch. Okay? Three Arrows, Uncle Bad Touch. Real Vision, Uncle Really Bad Touch. And then the list goes on and on. Maple Finance, Uncle Bad Touch. Coin Flex, Uncle Bad Touch. And then you're Voyager, and you're loaning them all money. And not only that, you're loaning them without some forced stabilization mechanism. What that means, when you guys hear, Jay Finley, what's up? When you guys hear forced stabilization, what that means is when you borrow money, like for instance, if you borrow money at Nexo, the way it's supposed to work, is as your collateral changes in values, your collateral goes down. And this kind of thing happens in the repo market all the time. Matter of fact, this is what happened to Bear Stearns. their collateral became worthless really quickly, and they were on the hook for $6 billion. And by 9 a.m., they couldn't make it. So they were done. Period. Full stop. They got force nuked, not even stabilized. SL Hines, what's up? So force stabilization, the cool thing about the crypto space is it's not JP Morgan calling it at 6 p.m. the night before Bear Stearns officially no longer existed. It's algorithmic, and it's smart contract based. So you have X amount of dollars, X amount of whatever as collateral. If your collateral reprices and it's no longer sufficient collateral for the loan you have, they start converting parts of your collateral in real time into stable assets. And they do that into dollars. Just think of it as converting it. It's called force stabilization. And they do it in real time. Beep, 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 so that you can't get to a point where there's nothing left. Well, Voyager extending 15,000 plus Bitcoin and 350 million USDC or whatever whatever mechanism they used loan to Three Arrows, that doesn't make any sense. So you start to think, well, what did Three Arrows actually have? And there's just a lot of questions that don't make sense. But forget all the bad behavior from all the creepy uncles, Uncle Bad Touches. Think about all the bad behavior in Voyager. If you extend debt to profligate members, Uncle Bad Touches, you're a bad touch. So this is just going to create these unwinds. And we have to get to the end of the unwind daisy chain, the last profligate lender, right? And so that's going to take a while, and that's why I don't think we are going to see bottoms yet. And also there's a big macro picture. So inside crypto, there's a lot of bad behavior, getting nuked out, getting exposed. The proverbial tide is going out, and now we see what's left. We see who is swimming naked. But we also see who is lending them bathing suit tickets. Like, I'm naked, but I need a bathing suit ticket. Well, here you go, sir. And then instead of using those tickets to go buy bathing suits, those idiots go and they just gamble them. Ugh. Marcel, what's up? Your name is so long that I know that Marcella, I'm pretty sure I got the first part right. Marcella, Christina, Christ, gmail.com. Okay, got it. Bam. All right. So anyway, that's where we're at. Jimmy James, what's going on? Brady in the house. TA does not handle macro. TA does not even see macro, and that's the problem. Technical analysis is necessary, but not sufficient. It's necessary to understand, because you do want to understand, you want to put together the past, right? You want to do a kind of a clever after action, right? You want to know what happened. Like, okay, the bomb blew up. Let's go backwards. Let's reconstruct it. Let's rebuild the room. Let's rebuild the bomb. Let's kind of see if we can put all the pieces together to give us an idea of what happened in this one specific unique case. JJ, what up? But TA doesn't go in a forward direction. Looking backwards in time and then just taking that chunk of that timeline and flipping it over is kind of TA. And it's just, you need so much data to even get to where it's like 50% viable. And guess what? It's not, because looking backwards doesn't give you an idea of these kind of black swan macro events that can take place. They can't tell you when a dude's going to be arrested or bankrupted, or someone gets some kind of, liquidity issue, cascading liquidations, blah, 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 bad behavior, right? And so because of that, you have to be very careful. So again, technical analysis, it's interesting. It's interesting to understand what happened, but just to understand this backwards facing, and it's less accurate predictively than just flipping coins. So, and hopefully you're not in this space or any investment space flipping coins. God. And hopefully you guys did, let me know in the chat, did you guys do your balance sheet calculations? Did anybody actually do this? I know that a few people did it, because I was texting with a few people that were like, hey, this is important. So I know that one or two people did it, but I did not see in our Telegram group, I did not see very many people talking about their balance sheet calculations. I'm guessing most people did not. Let's see, we have like 48, 47 people live. I'm guessing 3 people did it, maybe 4. And again, you don't have to expose those numbers, but you need to know them. Income, expenses, assets, liabilities. What's left is your cash flow. Out of that cash flow, that's your investment. That's your chunk that you could use for investment or savings. And you've got to decide, Do you want to save and lose X percent per year due to bad behavior, debasement effects, and such? Or do you want to invest it? And if you're going to invest it, are you going to do it in a way that makes sense? Gordon, you did it. Oh, nice. Okay, well done. All right. So yeah, let's see, kids. Is it time to exit Voyager? It's absolutely time to exit. I thought that was a given. Get out of Voyager. You can't get out of Celsius. Hopefully that's not an option, but you have to get out of Voyager, because you know that if they have that much bad behavior, if they're lending that stupidly, they're not a competent fiduciary. They're just not. And get out. And there's I was reading an article today about all the Bitcoin out. A lot of people are just taking their Bitcoin off of exchanges. Well, listen, most of these assets, the cool thing. So, and let me just say hello to Jim. I do it regularly. Yeah. And this is the thing, Jungle. I do it regularly too, so that I can kind of know where I'm at on a personal level. And that's how I establish what I'm allowed to spend each day. And I live, my own brain says, live 2 clicks beneath your means, right? So I can spend, I bring it to the day level. So I do my income expense, asset liability square, right? Like we did the other day. And just so that you guys, not to beat this home, but I do this piece here. And then when I get to the bottom, which is cash flow, okay, I then divide it by 30, and that's my daily cash flow. And then out of my daily cash flow, I only allow myself X amount each day to spend. And that way I know that I'm never going to be going backwards. Never. Period, full stop. And if I overspend one day, then over the next 2 or 3 days, I've got to go back. I've got to wind it back down and get back to flat. So I hope that makes sense. Yeah, I hope that makes sense. Okay, let's get back to this. So with Ethereum to an extent, because staking Ethereum is a little bit wonky right now, but with Cardano, you can stake on a private wallet. Polkadot, you can, but I don't recommend it. You can stake through Kraken. Kraken is safe. Kraken is liquid. Coinbase is safe. Coinbase is liquid. I think it's funny. Did you guys see, Agassi, what's going on? Did you guys see, it's kind of funny, Goldman Sachs, they downgraded COIN, their equity, to a sell, and yet they're putting tons of money in. Matter of fact, they're actually buying distressed asset, or they're negotiating to buy distressed assets from Celsius. You think that's funny? Does anybody else think that's kind of funny? Jesus. Todd B says, big red flag with Voyager is that you can't move assets without swapping to cash. Right. So that is a big red flag. And what that tells you, now that could be a regulatory issue, but that smells, it tastes a lot to me like some of the machinations over at Robinhood, where you didn't really own the assets. And in some cases they didn't either, because they were gambling. Greed is nasty, right? And so a lot of these guys, it's mostly guys. Women don't seem to screw people over as much as guys do. But a lot of these guys seem to think they're smarter than everyone else. The people at Robinhood thought they were smarter than all of the people. And look, you look at Robinhood, who were they catering to? Well, a bunch of dummies mostly, if we're being honest. No offense if you had a Robinhood account, but serious digital asset investors and crypto asset investors were not leveraging Robinhood. You knew it was proxy ownership. You knew that you didn't own anything except some kind of ledger entry on a balance sheet. The danger is that they thought they were smarter than all the people that were getting on their exchange. They started gambling against you if you had a Robinhood account, and they were naked. A lot of times you would buy a position, they wouldn't even have it filled, even though they had this preferred order flow through their own kind of vendors, market makers, which was very sketch. But they didn't, in some cases, they just didn't even turn in the orders. So they were naked. Their vendors were naked. The people selling options were naked. They were selling the naked options because they thought, well, who cares? These people are all stupid. Of course, you know, Hertz and Ford and GameStop are going to go to zero because they're crappy companies. Why wouldn't they? Well, why wouldn't they? Because you got a bunch of people sitting on their couch getting free money, wanting to wreck the man because they woke AF, even though none of them understood finance, except for the one dude that was milking it from the Reddit army, the one guy on the inside who made a boatload and then ended up testifying in front of Congress. Well, yeah, I know a lot of people got hurt, but I did okay. Oh, did you? That's good. That's great. Why don't you take your winnings and spread them out to all the people that you talked into taking the other side of that trade that were still shorting GameStop even as it was going up? Why don't you tell, or they were going long through options. And then it got too high and then of course sold off and 94% of the people got smoked. Or all the people that got talked into Shiba Inu, they got smoked. Or all the people that got talked into Doge, they got smoked. Or Hertz, they got smoked. Or Ford, they got smoked. Go on down the list. Smoke. So it's a lot of bad behavior, bro. So just be very careful. Be careful. Yeah, I never had a Voyager account. Any of those proxy accounts seem kind of sketch. So just be very careful. Tim, what up, man? Okay. But what I was going to say about your protocol layers, many of them you can stake directly with the protocol. So Cardano, you can run a dataless wallet. It's yours. It's on your PC, laptop, whatever. You have your private keys. You have everything. It's very good. Polkadot, you can, but it's easier to go through Kraken. Matic, you can. Matic's got staking in a couple of places. That's okay. I like Nexo. I like Kraken also. Nexo is a little bit better in my opinion, but again, you don't put everything in any one place. Near, directly with Near. Algo, you can go in their wallet, but you can also go with Coinbase right now. I like the I think it's still 5.75. Oh, there's the naked guy. Yes. So with Algorand, you can go in their wallet, but I think it's better to go with just with Coinbase. I'm still buying Algorand pretty heftily. I still think it's too juicy. Filecoin is interesting to me. I'm just trying to figure out what people do with all of these rigs when they shut off. If Ethereum 2 comes, when the merge comes, it is coming at some point, right? Like maybe September, October, November, whatever. Whenever the merge does finally come, do some of those miners take those GPU rigs and go to Filecoin? Well, it's not the same. It's not really the same. Those rigs are not purpose built for Filecoin mining. Maybe. Do they? I would be looking at the list of the other coins. I think this is a trade people could make. There are a handful of coins that you could mine with Ethereum rigs, the Ethereum ASIC mining rigs. Well, they're obviously going to being not turned off, but they're going to be repurposed when Ethereum goes through this merge process, where they will be bringing on proof of stake, replacing the current proof of work. And I think they'll leave one timeline, essentially one shard of the 64 will be proof of work, and then the other 63 proof of stake, whatever. But all those mining rigs are either going to go somewhere or get shut off. They're not going to probably get shut off where it makes sense financially. They'll mine other assets. And odd as it is, Ravencoin is one of that basket of potential assets. So, and I'm not saying go buy Ravencoin. We don't like animals or food products, but no badgers, no ravens, no nothing, because they don't pass any of the 5 Ts, not even close. But for those of you riskier gents, there may be a trade there to be made against that group of miners turning to other protocols to mine them, at least in the interim. Will Ethereum Classic get? Probably not. Ethereum Classic's kind of dumpster fire. Anyway, who else? So many of these as Fetch, you can go directly with Cosmos Station. So directly with Cosmos, you can get it off the interwebs. AGIX with Singularity Net, NewNet through Singularity DAO's platform. Singularity DAO through Singularity DAO's platform. By the way, Dynasets are about to initiate their Dynasets, which allow shorting, which is going to be pretty cool. I'm kind of excited about that. That's when I will I have been to this point just investing in Singularity DAO, the token. I may participate in this next one because they're outperforming Ethereum by quite a bit. And so that'd probably be my trade. I'm not going to mess with Bitcoin. Bitcoin is not super exciting to me. It is what it is. It maintains a place in my portfolio. I like owning Bitcoin. Bitcoin was a great stable coin for a while. But it was never stable. That's always been a source of contention for me. I think the maximalism in Bitcoin is getting even more toxic. That's dangerous, and I just don't want to be any part of that. So while I think Bitcoin price-wise is going to do quite well, and we will, in my opinion, we will see an easy plus 100, plus 200, 300K Bitcoin, I think the path to financial nirvana is probably through alternative assets that are going to be the underbelly, the infrastructure of whatever Web3 looks like. And these metaverses, it's all kind of part of the same. When you think, oh, what's a metaverse and Web3? It's all an amalgam of the same stuff. When you think Web3, an easy way to think of it is all the A's and all the V's and all the, right? So if you have a socially driven network that has AR and VR and XR and AI, right? All the A's, all the V's, what is it? So artificial intelligence as we move into artificial general intelligence, right? Main theta, what's up? So that's the AR. Then we have VR. We have virtual reality. Then we have we have AI, AGI. So artificial intelligence, artificial general intelligence. That's the transition. Then we have AR, artificial reality. Then we have VR, virtual reality. Then we have kind of like augmented reality. That's kind of more AR. It's kind of like this augmented, it's a reality that we see with bits of AI that help it become more active and more kind of where you participate, where your environment, you can participate with the environment through a bunch of cool information overlay, like Terminator, like, you know, the little, anyway. So, and then XR, which is usually XR, he's making stuff up. Extended reality, right? Like going beyond just the interface and just a more immersive reality, right? So you have this extended reality. Well, this is what Zuckerberg's not an idiot. This is what he's seeing. His goal is you get 1, 2, 3 billion users all spending $100. You got $300 billion a year coming in. That's not so bad. Not so bad. Let me say, okay, so Adam said it. If I were to bet ETH2 fully live migrated from current 1 of this year, I'd take the over. ETH2 is fully live and migrated from 1. I don't think they get it. I don't think they get it done. Well, look, when you say fully live, do you mean like they're going to get through the merge? But the merge isn't fully live because that just means they've gone to proof of stake. They still haven't solved, you know, their global issue and like their state issue and stuff like that. So that's they've already said that's going to be 2023, maybe 2024. They hope by mid 2023. But that was before they were having all these problems, all these testnet, these what did they call them? Non-trivial chain reorganizations. So. And you better believe that's one of the reasons Cardano pushed the brakes on a lot of things. They were like, let's make sure we get this right. Harmony 1 was exploited. Yeah. We talked about that, Luke. Good to see you, by the way. We talked about that last week. It was, they were exploited, but it was the exploit was much more simple than people were talking about. It wasn't some clever flash attack or they just simply, they engineered 2 of the 5, like logins. They have a multi-sig wallet essentially, and they have 5 main entities, and it's a 2 of 5. It takes 2 of the 5 to sign these transactions. They engineered 2 of the 5 passphrases, keys, whatever. They had enough to divert funds. So they diverted funds, so they got caught. It was around 100 million. Jim, what's going on, Jim? So anyway, yeah. So that was less interesting. I was thinking it was some kind of cool, I say cool, but it was some kind of really interesting flash loan attack or something, but it was much simpler. They just engineered 2 addresses. They basically got 2 logins, like 2 dudes that were like, admin's fine. We'll use admin. They got it done. Let's see. Rod, what's up, Rod? When you estimate the bottom for all, man, I think we need to see the Fed's always late. I think so many people believe in the Fed. There's a lot to this. It's not a simple answer. I'm not going to go through the whole thing, but I will tell you this. I don't think we see a bottom until all of these companies get nuked. So a crypto bottom doesn't have to wait for retail bottom, but a crypto bottom is not going to come until all of this bad behavior gets nuked out. 3 Arrows has to die. They have to unwind. How that unwind happens, does that mean assets get sold to cover losses, or will some of those vendors on the other side of this default accept crypto in payment? I would assume they would, but we don't know. Would Voyager love to get their 15,000 Bitcoin? Well, yeah, they're borrowing essentially from FTX, from Alameda. So, I mean, it depends how the unwind happens, but they are in default as of today. That's the article we're going to go over in just a second. Jungle, I can always take it or leave it with adding more BTC. This reason's probably been my best trades. Yeah. No. And that's the thing. If you don't fall in love with these assets, I think that's the takeaway. You don't have to be an anything maximalist. If I was an anything maximalist, I'd have lost money. I love me some Cardano, but I was selling. I didn't sell at 3. I didn't know where the top was, but I was selling in the 2s. I was selling Bitcoin. I'm always kind of churning this stuff. When things go too fast, you have to put some currency units back in your portfolio, I think. RJ, what's up? You're not covering profits to converting profits to Bitcoin anymore. I'm converting profits now to what I think are the worst performing quality assets. So any of my protocol layer assets that I think are really quality that have gotten beaten up. So right now I'm converting a little to Ethereum, not much. I'm converting to Cardano. I'm converting to Matic. But basically my main buys have been Matic, Near, Algorand, Cardano. Those have been my main right now. Matic, Near, Algorand. My last purchase was Near at about 330, 340, whatever. And then, which Near having a tough day today. I was buying Matic at 40 cents. Matic's getting punished today. Everything's getting punished today, but thank God we had a decent weekend. John, what's going on? I'm buying Algorand. And so I'm just buying whatever I think got punished the most. And Algorand got punished. In my opinion, it's one of the biggest gotten punished, and it's behaved a lot like Cardano. So I'm adding Cardano, but I'm also adding through staking. I'm adding Algorand through cash and staking. I'm adding Near through cash and staking, Matic through cash and staking. So it's kind of a double whammy. So I'm not buying Bitcoin right now because I don't think that's the greatest opportunity. And again, I'm using that November price sheet, that November kind of cheat sheet. Crypto Amigos, what's going on? JJ, question. Nick, how's it? Leroy's doing good, man. He's just really building a lot in the NFT space, like the underlying code to launch a lot of these projects. They've been launching a lot of stuff. People in the NFT space still launching stuff. So he's busy. Luke, what's going on? Cyan, what up? Google AI already is self-aware. Interesting. Yeah, I mean, we're getting close. Someone was Scott was asking me this morning, well, what, are you worried about it? No, I'm not worried about AI. It's coming either way. I just want to be long AI. Not worried about it. Tower, what up? Yeah. So it's like worrying about a sunset. Well, it's going to happen. So, and look, we can do all of this work with artificial intelligence as we approach general intelligence. Remember, I don't think that you should look at the move from AI to AGI as one organism that gets injected one more intelligent point, and all of a sudden it's nature and nurture and self-evolution. It can fix its own code and it rewrites the future. You could have swarms, big giant swarms of AI agents that each agent looks simple, but the net effect is general intelligence. And when that swarm, that emergent shape, transitions to generally intelligent status, it's going to do what game theory says it's going to do. It almost, I know this is controversial, but it almost doesn't matter who ushers in general intelligence, because the next decision will no longer be based on its benevolent leaders or whatever. It's going to be based on the game theoretical best next decision for the life of the organism or that emergent shape or that entity or that swarm of intelligent agents behaving in something that looks generally intelligent, synthetic intelligence, whatever you want to call it. So I don't think it much matters, but we are going there. So I want to be long because that might maybe be the last chance we have to participate financially. We're going into a world of UBI. You guys see that, right? Like that's kind of, I think that should be painfully, like ridiculously obvious at this point. LA, what up? Good to see you. Good to see you. Okay, so let's go look at some articles. Let's Let's talk Voyager. I think it's important. Look at him. He looks. This is a co-founder of Voyager. So this is who you trust right now. I would just say this is your dude. So let's talk about the dude. Voyager Digital issues default notice. So we talked about this. There was 25 million due Friday. Oh, this guy. Oh, you're so good. Block user. So there's 25 million due Friday. If they didn't get the 25, there was another 75 due today. No, they're in full default today, as a matter of fact. Bratwork, what's up? They are in full default right now as we speak. And real quick, we've got to have at least 35 likes. This is it. It's on you. I end the video. There's not 35 likes. The video gets nuked. But then again, for you guys that saw it, maybe you want it to get nuked because maybe you don't want other people to get this information. It's on you. Will you be kind and benevolent? You are an emergent, you're an organism, all of you working together. Benevolent, though may you not be. All right. So Voyager Digital issues their default notice to Three Arrows Capital, draws down 75 million of Almeida's revolver. They have a revolving line of credit in order to manage this. They're using that revolving line of credit. This again is just telling you that Voyager is an incapable lender. They're like the dudes that they're like Deutsche Bank, that not only did they lend money to Donald Trump, but when they were going to call his note, he conned them into more money. I mean, it is outrageous how bad Deutsche Bank is. Well, these guys are just as bad. They're just as bad. The money's not as much, but it's just as bad. So anyway, shares in the crypto exchange plunged last week on disclosure of its exposure to Three Arrows Capital. And then this rube, Steve Ehrlich, is a co-founder of Voyager Digital. He seems a bit clueless. He seems a bit like Zadia with the headlights looking at until the car crashes into his face. Crypto brokerage Voyager Digital has issued a notice of default to Three Arrows. They had already said they were going to do it after the beleaguered hedge fund failed to make required payment on its loan of 15,250 Bitcoin and 350 million in USDC. A lot of people shorting Tether, by the way. Now, it's not exactly clear the reason why they're shorting it. It's a little murky. Some people are saying that they're shorting Tether because they know it's garbage. Some people are saying that it's a cool trade because people have heard stablecoins suck, so they just want management fees, right? Which is like the 2% you get on managing. If you get enough money, even 2% is a lot, right? Like you have $1 billion, well, 2%, so that's $20 million. Not so bad. It's kind of good. You make that money for nothing. Not nothing, but for managing. And if you're just managing at the start of a trade, I don't know. So it's a little sketchy, but we'll see. I think everyone should be out of USDT, right? We don't like T. All right. Alongside, Voyager announces drawdown of 75 million, the emergency 200 million cash and USDC credit line provided by Alameda Ventures. The facility also included a 15,000 Bitcoin revolver, like a revolving line of credit. As of this morning, that's today, the company had 137 million of cash and crypto assets on hand. The exchange has also retained investment banker Moelis & Company as their financial advisor. Voyager's share price plunged more than 60% last week after it disclosed it had exposure to Three Arrows Capital, which had previously said that it had suffered heavy losses from the sharp downturn. No, That's an effing lie. Three Arrows is down because they were gamblers. They were degenerates. They did not know what they were doing. They were stupid. Don't let these dudes blanket over their poor behavior and their gambling and just tell you that it's because crypto. It's because of the markets, because Jerome Powell. Bull crap. It's because you guys are gamblers. These arrogant dickbags are compulsive gamblers. Look at all the projects that they own. I won't go through the list. It's all the worst projects in the space. All of the worst, where the most gambling, where the most bad behavior is. These dudes deserve to get nuked. Period, full stop. And you know what? Voyager deserves to get nuked right along with Celsius. Right along with the same way that Do Kwon got stomped on his neck. Of course, he's fine. He's rich. As long as you guys are cool with that. Oh, by the way, most of those early investors, they're fine too, because they got marching orders early. I would be really curious to see what the total losses are at Galaxy Digital. You know, tattoo on the arm. Oh, I guess I'm a lunatic. He got his whole arm tattooed. We're supposed to believe that he didn't get a little wink and a nod. My guess is when Do Kwon goes down, Novogratz goes down, because that's coming back. That dude will snitch everything, right? And these other companies, Celsius can say it's not our fault. It's Do Kwon. And Novogratz can say, he can either say it's not my fault, I'm stupid, it's Do Kwon, I shouldn't have invested and gotten a stupid dumbass tattoo on my arm. Like, no one should be that bought in. This is retarded. Or he's going to show that he didn't take losses. And then a bigger question will arise. Well, wait a minute. You big maxi that was out there telling everyone that Luna was awesome, you and the idiots at Real Vision. How is it that you guys didn't lose money? Is it that you knew something we didn't? Please explain that. So these dudes all have a lot of explaining to do. Lots. Dubai Money, what's up? So Jay Finley, what's up? So anyway, just be very careful. CEO Steve, this is Voyager. Voyager CEO Steve Ehrlich said, we are working diligently and expeditiously to strengthen our balance sheet and pursuing options so we continue to meet customer liquidity demands. Bro, they're going to shut down. Just understand this. Voyager, without a lot of help, they've already been given like $600 million essentially line of credit, $650 million line of credit. They shouldn't need $500 million line of credit if they were competent and if they were taking collateral and converting it, and if they actually had their hands on the collateral. So until all this crap gets worked out, until all these dudes are gone, market's not going to be settled. All right, let's take a look at what's going on over at the Nexo. So many of you heard, oh my God, they were stealing from a charity and all this kind of stuff. And this is outrageous. And what should we do? Well, just be very careful. You want to always look deeper. And if you look deeper, so a pseudo-anonymous Twitter account making a series of accusations against Nexo has caused the lender to issue a cease and desist order. The lending platform Nexo has hit back with what it called fake news and rumors that the founders, so this stuff came across that the founders were part of this charity embezzlement scandal. And the whole thing is funny because the amount of money that they supposedly embezzled is like dust. It's like dust. And then you start finding out that the names aren't quite the same and the spelling is different. And there's like maybe somebody's cousin. And you're like, wait a minute, this looks a little weak. But right now, everybody's got their antenna on high alert. Anyway, Lendo platform Nexo has called back what it calls fake news and rumors that the founders were part of a charity embezzlement scandal, saying the claims are untrue and defamatory, has issued a public cease and desist to the originator of the allegations. In a blog post, Nexo stated, several anonymous Twitter accounts are using lies and distortion in yet another smear campaign against Nexo and profiting from short-term positions in the distressed market. People are shorting the Nexo token through Binance. They couldn't do it until Binance. Now they can. So just, it is what it is. Listen, also don't keep your money anywhere you don't feel safe. If you don't feel safe, I feel safe on Nexo. But that doesn't mean anything. If you don't feel safe on Nexo, get your stuff off of Nexo. I feel safe. They are backed by real money. They are the only ones that seem to be working with regulators. So That's how I feel. But you got to feel safe for you, right? Don't do anything because anybody else says. Anyway, the pseudo-anonymous Twitter account Otero, which calls themselves Otter, posted a series of tweets on June 25th, claiming that Nexo's co-founders stole funds from the Bulgarian charity Help Karma to buy real estate and fund lavish personal travel. What is lavish personal travel? I wish I had some lavish personal travel. The thread garnered a large audience on Twitter, with them sharing a screenshot that it received 9 million impressions, prompting Nexo to respond with what they say is ludicrous allocations and the cease and desist. The central allegation that they made, because you want to know what they said, was that Help Karma and co-founder of Nexo, Consta. Now, spelling is important. Konsta, Kanchev, Kanchev, because, spelling, right? This is important because it's not the same person. But anyway, that Consta had used funds from donations to help build a palace instead of using the money for children's medical treatments. Okay. And they labeled them, they miss, the names are different spelling, and then they label them these other names. They give them like code names, and then they use the code names throughout the rest of the tweets. The problem is that the names are not the same. In response, it points out that Consta Kanchev doesn't exist. And Otto deliberately made the name to mimic a typo as an excuse to fact checkers by confusing two different people. Help Karma founder Konstantin Krastev, not Kanchev. So Kanchev, bad guy. Krastev, Krastev, good guy, or at least different guy. And Nexo co-founder Costa, so first name Consta, bad guy, Konsta, good guy, Costa, Kosta. So you can see where this all gets kind of weird, right? So they're merging two people. All right. Speaking to Cointelegraph regarding the conflating of the two, Otto shared a delisted article from the Bulgarian outlet Fakti, saying that the two are cousins, actually. So they are even admitting, after they said this, they're even admitting, well, okay, these aren't the same person. They're cousins. And the Bulgarian spelling is different, Konstantin, but they didn't provide any more proof. So that's where, when they got called out on the misspellings, they just got quiet. Another major allegation that Otter, which is this the address on Twitter, offers, says that as Help Karma's donations increased, the payday loans company Credissimo started to report considerable increases in its capital. So they're basically thinking, well, Credissimo, as donations were coming in, Credissimo is taking increases on their balance sheet, meaning they must be stealing. They were implying, now they don't have any proof, but they were implying that donations were being used to fund Credissimo. Okay, on how this scandal links to Nexo, Otter points out that Nexo's white paper says it's powered by Credissimo. Credissimo was founded by Kanchev and Nexo co-founders Georgy Shulev and Antony Trenchev. There's a lot of words here. And that the company's business development and innovation officers, respectively. Okay. In response to the claims, Nexo says that it and Help Karma have not and never had any common operations, common beneficial owners, or common management, adding, why would a company with hundreds of millions in revenues and billions of assets under management, vetted by Fidelity, MasterCard, and dozens of government regulators, ever have to resort to petty theft, let alone theft from children with medical needs? It's the next logical question. This is a logical question. If you have tons and tons of money, why are you stealing like thousands? This isn't even millions, this is thousands. Why are you stealing thousands when they're making tons of money every day? Because they're basically the only crypto lender left unscathed, right? They're the only ones that weren't profligate. So I would just urge you, and again, I'm not saying go full nuts Nexo. I'm just saying, like, common sense a little bit here. So it looks like there are a lot of people that are trying to short the Nexo token. Also, Nexo shared images of an individual who attempted to purchase Otter's account. So these guys that are doing this with this account that came out of nowhere, they built the account up through this kind of whatever we call misinformation or weird information that's not quite logical. They're trying to sell the Twitter account, right? You get a lot of followers, you sell the account. This is kind of a normal thing. You're not supposed to do it, but people do it. So this is what Nexo believes is the whole point of all these allegations, is to gain a large Twitter following and then flip the account. Nexo shared images of an individual who attempted to purchase the account, which Otter responds that they want a minimum. So they saw a negotiation, which is illegal, by the way, for 50,000 USD. So it's kind of, just look at the background of this stuff. Nexo says this isn't the first time they've been part of what's called a coordinated smear attack. In 2020, there were accusations that it was linked to Zeus Capital, which is a management firm that wanted to short Chainlink. Well, if that management team shorted Chainlink when they were talking about it, they made a lot of money because Chainlink is a joke. Chainlink is a failed business model. Up to this point, sure, they could make changes, but up to this point, Zeus Capital, by hook or crook, was correct. Chainlink was a very poor investment, and it has been shown to be a poor investment. There's nothing moated about this. I mean, that's a whole other thing. We could talk about Chainlink for a while. I got out of Chainlink and urged people, like, there's nothing unique about this. And these new layer ones are going to have their own Oracle networks and ways to inject information into smart contracts that will have nothing to do with Chainlink. It won't be a pay-to-play model. It is what it is. Behave as you believe. All right, and the last thing, let's talk about the crypto hedge funds traders short Tether after UST's implosion. Okay, I'm telling people to get out of Tether because I don't trust it. I don't know why you would short it. Shorting anything is taking an undue amount of risk. Now, at least when you're shorting a currency, you're shorting it against something else. If the currency unpegs and gets nuked, you could have problems. And I think that a currency like Tether, USDT, could definitely depeg and get worked over. At some point, there's melt value to the token. We don't know what that melt value is because no one other than the creeps over at Tether know what's behind Tether. It's been a long-running Ponzi scheme. Problem is, in crypto, oddly enough, no one seems to care. Still no one cares. Now, everybody has heightened sense of alert because of the debacle at Terra and the debacle of the Flex token. Like, there's a lot of stable coins now. The Tron one, USDD or whatever, D-Day, USD-Day. That one's unpegging, and they've had to throw billions of dollars at it. That's just a dumpster fire. But of course, everything Justin Sun does is a dumpster fire. But now we're talking about this dumpster fire. So for this particular dumpster fire, let me guys get you over so you have something cool to look at. Ooh, look at all those dollars. Looks delicious to me. The positions are worth at least hundreds of millions of dollars in notional value, one trader said. So these are short positions coming in. Crypto-focused hedge funds are increasingly shorting US dollar peg stablecoin Tether amid a bleak market outlook nearly a month after the implosion of Terra USD or UST, the Wall Street Journal said in a report on Monday. Remember, anything the Wall Street Journal says is going to be not a day late. It's going to be like 3 weeks late and $100 million short. So I wouldn't bank on this, but this to me this looks like wartime profiteering. So there's been a real spike in interest from traditional hedge funds. That's not quite accurate. Who are taking a look at Tether and looking to short it. Well, say taking a look at it. Yeah, everybody's looking at it. After UST melted, you're looking at all of your stable coins and asking yourself, as a competent human, which of these are legitimate and which of these are dumpster juice? I think that's a rational question everybody should be asking themselves. Anyway, Leon Marshall, head of institutional sales at Genesis, said in a statement, institutional sales. This is a dude who makes money. He gets a management fee. And I do too. I'm not hating, but he gets a management fee for getting you to agree and go in with him and shorting. He's going to get a management fee no matter how the trade turns out. Understand that. So I'm not so sure this is the guy we should be getting our marching orders from. Genesis and CoinDesk are both independent subsidiaries of Digital Currency Group. So fact number 2, the news agency reporting this is a partner subsidiary of Digital Currency Group, CoinDesk, and Genesis. Therefore, the owner, Digital Currency Group, owns both CoinDesk, the news agency that's reporting this, and also the company that Leon works for. Keep that in your mind. These things are important. If you think they don't talk, shenanigans to you. Genesis said short positions increased after the multi-billion-dollar implosion of UST. Well, of course, there's a little hedging taking place, I'm guessing. Prices of the algorithmically controlled stablecoin plunged to a few pennies in late May, causing contagion risk damage within the crypto space that affected prominent crypto lenders and trading funds. Yes, but that behavior is because of assuming profligate behavior in these lending platforms and trading firms. 3 Arrows, garbage. Voyager, stupid. Celsius, bad. CoinFlex, terrible. Maple Finance, bad. Like you see, everything on Solana, bad. Like, right? But of course, if you do a bad thing long enough, you're going to get caught, or people are going to lose faith. They're going to be like, I'm out, bro. I'm taking my cash and going. Some funds are shorting USDT as a bet on the broader economy as the U.S. Federal Reserve raises interest rates to curb 40-year high inflation. Well, that assumption is stupid too, Leon, because the Fed has already said we don't think we have control of interest rates. Well, they didn't say we don't think. They said we don't have control. Powell admitted they don't have control of interest rates. They never have, ever. So this Leon tends to buy into the myth. The other thing, the Volcker myth. Volcker in the 70s, he didn't raise rates to beat inflation. He didn't raise rates to force a recession because it was good medicine. They didn't know what the F they were doing. He admitted as much. Greenspan this has already been admitted. The Fed admitted we didn't know what we were doing. We still don't understand money. It's too complex. Why on earth is anyone listening to central bankers or fake central bankers like Jerome Powell? Why I say fake? Because the Fed is not a central bank. They don't do money. These are super important things that need to be part of your understanding of like your foundation for monetary policy, right? Fiscal policy, lobbying and corruption, and insider trading. Monetary policy, vacant, clueless, deer in headlights. That's where it should be. And coupons instead of money. So based on that, others are concerned about the quality of the assets backing Tether. Now, this makes sense. You should be concerned because they've never been audited. They've never been successfully audited. That's important. When 3 dudes that their phone doesn't even work, that's the auditing firm, and that there's $60 billion against $60 billion of belief against that, that's not so good. Stable coins like Tether are backed by fiat currencies and equivalent asset investments. I don't agree with the word equivalence. Cash equivalence means, government debt in the only good quality cash equivalent to $1 is U.S. government debt, short on the run treasuries that you roll over. That's it. That's why USDC, good. USDT, who knows? Like, who knows? Anyway, Tether is backed by fiat currency to some extent. Who knows what extent? They say 70. I say, maybe. They've been running a Ponzi scheme and buying Bitcoin on the cheap for years. Maybe they have the cash. They probably don't want to inject it. They may be looking at what makes more sense, keeping the money they stole or injecting it back in to fill the coffers. I don't know which way they're going to go. This is when they have to decide, do we want to get rich and maybe go to jail again? They're all on probation. Or do we want to just put the money back in, bring the coin back up to some kind of equivalent or proxy amount of dollars to whatever? I mean, it'd just be very interesting, but they may have to sell Bitcoin to put dollar for dollar cash back in. So there's a lot of reasons why we're not at a bottom yet. Anyway, this is yet another one. So is Tether commercial paper? Is it bank deposits? Is it bonds? Is it gold? Is it cryptocurrency? Who knows? We don't really know. We just know what they say and what their little auditing firm that won't answer the phone says. It's not even a real auditing firm, so it's very, very not good looking. Stablecoin market has taken a hit since UST's implosion in May, with investors redeeming huge amounts of USDT. In mid-June, investors pulled another 1.7 billion from Tether in 1 week alone. Tether's market cap has fallen over 20 billion since mid-May. Good, because it's becoming less systemically important. And as USDT deteriorates and USDC gains, I think we're in a healthier place. To me, you want to find the bottom? If USDT got nuked, unwound to dust, if we got to some point, we don't know what the point is where they have the actual cash, because they're running out of cash as people redeem, right? As people leave USDT for dollars, dollar proxies, USDC, we're going to get to a point where there's no more money left, or where they can't unwind because of liquidity situations the stuff that they do have that represents money. If they're sitting in a lot of weird corporate debt and kind of creepy bonds and stuff like that, that's not pristine collateral, they may not be able to unwind. They might have some kind of weird gap down situation where the paper that they own on the other side of the balance sheet is too low liquid to exit. So that could be gross. And I don't want to be in Tether when that happens. Tether's market cap fallen over 20 billion. Funds like Fir Tree Partners and Viceroy have previously bet against Tether, citing opacity in the asset's actual backing and lack of audited reserves. And while this is true, everything they're saying is true, right? They are opaque. No one knows what they own. Who knows what the backing is? And there's an extreme lack of audited reserves. None of it's audited. We don't know. But it looks like these guys are doing it, and they may be right, but they're doing it to collect a fee, right? They're doing it so that you pour into their trade. Maybe the trade goes well, maybe it doesn't, but they want to collect a fee. They're going to get their fee no matter what. So just be careful. While I agree with them, I would not be shorting Tether. There's probably all sorts of other ways. I wouldn't be shorting anything. You don't short after the market's been down for 8 months straight. You can get your face ripped off. I just wouldn't mess with it. Tether officials have, however, denied such risks exist. In June, Tether said rumors of its portfolio being 85% backed by Chinese and Asian commercial paper were completely false. They're like, no, it's Scandinavian and Botswana paper, not Chinese and Asian. Silly. And it was largely perpetrated by those looking to generate additional profits from an already stressed market. I agree. There's probably a fair amount of that. In April, a Tether spokesperson told MarketWatch that said that short sellers seem to be involved in a clever scheme to raise capital from those less knowledgeable by leveraging disinformation, and the end goal is to collect management fees. There's probably something to that. It doesn't mean they're wrong. So you do you. Just be smart. Invest in things that you believe in, or don't. If this market hurts, then get out. I think this is an investable market. I think this is when you buy. I know people with a lot of money that are doing a lot of buying right now. A lot. Why do you think Goldman Sachs is saying at the same time, hey, we're downgrading coin, but at the same time, they're buying up, they're trying to negotiate buying distressed assets from Celsius? Those two things don't gel, friends. Is it bad or is it not? So Goldman Sachs is telling you the market's crashing, and yet they're hiring 200 people for their digital asset division. Goldman Sachs is telling you that coin is dying, and yet they're going and buying assets, distressed assets. Why are you buying distressed assets if you think the whole thing's dying? Goldman Sachs is not a place where you'll ever hear a press release. These are the same guys that not even a year and a half ago were saying all these things were bad. They were saying the whole thing was stupid. Crypto is stupid. Bitcoin makes no sense. Like the whole thing. Follow the money. Suze, you just won the internet. All right. Hello from what? Hanoi. Welcome. Oh, no, not that guy. Not sexy Tinder date guy. Overpriced Tinder. How's Tinder's free? I don't know how it's overpriced. Anyway, thank you, Adam. All right. Have a good one. Stay in school. Don't do drugs. Let's see, you're trying to withdraw. No, they have like a withdrawal period. You'll be fine. They have like a withdrawal period, and you'll be able to withdraw or move your money around or do whatever. So don't stress about it. All right. And Crypto Fanatico, good to see you. All right, let's call it a day. Stay out of trouble. Stay in school. Don't do drugs. Don't do anything my poor, insolvent, drunk, strung out on meth grandmother would not do. And as you know, that is so very little. Thank you for the Thetans, Twitter, Twitch, Facebook Live. I don't even know if anybody watches from Facebook. Is there a Facebook anymore? Oh yeah, that's right. Meta, that giant company, that giant company that's going to probably be better at rolling out a metaverse than anyone else. Do not think Mark Zuckerberg is an idiot. If anything, he's shown the world he's not. I would not short Meta right now. So anyway, have a good one. We will see you Wednesday. That's right. We'll see you Wednesday. And at some point, Emil and I and Jeff are doing another show, but I'm trying to figure out when. We're trying to schedule it now. Okay, throw some likes up there so I don't nuke this video. Belinda, thank you. Jim, thank you. Everyone, thank you. And I'm up out.